Look, it's funny, the way the story is written by Mark Gurman. He says people are using them also for thrill-seeking. They're getting on roller coasters and using them. Why are these Oakley versions going to be better?
I mean, it just turns out to be a better form factor when you think about, the Ray-Ban glasses. Compared to the VR headset, I would say it's a much easier form factor to use, as an AI glass. But at the same time, I think they also realized that the VR headset weren't really as impressive to use from a gross margin perspective. So I think the Ray-Ban glasses and the Oakley glasses probably are better from a gross margin standpoint. And look, in the case of Meta, we know they'll be losing about $20 billion this year on Reality Labs. And there is no line of sight in terms of when this is going to get profitable or, when the economies of scale will kick in. So from that standpoint as well, I think it's a better pivot for them to focus on the glasses compared to the VR headset where they were doing all the manufacturing themselves from the ground up.
So they stick to displayless, or at least they enhance the offering on displayless. How many of these do you think they're actually going to be able to sell overall? Because you've run the numbers with your latest BI piece.
Yes, I have. So look, when it comes to Apple Watch, there are about 40 million units sold. AirPods are about, give or take 70 to 80 million in a year. Ray-Ban glasses were about 1 million, and VR headsets were about 7 million last year. So adding Oakley, which has the same parent company, we're talking about maybe it scales from 1 to 2 million this year, but it still doesn't match the scale of an Apple simply because the ecosystem that Apple has with the content and the App Store, it's so hard to replicate for a Meta. And that's been their challenge, even though they have invested so much. So to my mind, ecosystem is where a Meta lacks, and it'll be a hard thing to scale up even with the Oakley glasses.